People are definitely concerned about the cyclical slowdown and like some type of fear element in their mind that this is going to end at some point. But that's been going on for the last 15 years. The market's been booming. Even during COVID, the recession lasted like 2 months essentially. But as far as the amount of wealth growth we saw with the government printing money and people investing, it did not compare. Business cycles are fundamentally risk cycles. We will at some time face challenges, but what's happening right now is unprecedented. It's an immense boom, and we just keep seeing all this go up with the stock market. The core question for any investor really is this slowdown going to be linear or non-linear? Neil Dutta, one of the best business economists, this is what he has to say about that question. Right now, we're sitting in a very clear linear slowdown when it comes to the broader consumer. Spending is grinding along at a stable but uninspiring pace, hovering right around 2%, sometimes a little above, sometimes a little below. Because underlying income growth has been sluggish, consumption is naturally losing steam. Left to its own devices, a linear deceleration means we drop from 2% growth down to 1% or maybe 1.5%. It's a soft landing, it doesn't mean we fall off of a cliff. But a nonlinear move is entirely dependent on the labor market. If we start to see meaningful, widespread corporate layoffs outside of the isolated tech sector, consumer spending will collapse overnight. Look at the latest data from the Bureau of Labor Statistics. Non-farm payrolls for June increased by a mere 57,000 jobs. This is a sharp deceleration from the downward revised 129,000 in May. And it completely missed the consensus forecast. When hiring freezes up like this, the margin for error vanishes. On the corporate side, tech firms see immense revenue growth and tight capacity for advanced models from players like Anthropic, giving them every reason to remain aggressively optimistic. But every single exponential curve in history eventually transforms into an S curve. The build out phase for data centers will eventually find its ceiling when the massive wave of infrastructure spending stops. The revenue growth supporting these multiples will flatten out. So that is a huge concern that everybody has. We just don't know when it's going to happen, how it's going to happen. What it's saying is that there is a macro disconnect between inflation and corporate workers. Inflation is sticky between 3.5% and 3.8%, which is far off from the Fed's goal of 2%.